Hey, good morning, everybody. Justin Atterbury. I hope you are having a fantastic day. And as quickly as I can, I want to take care of a very common question that has been coming up for about a week now. And that simply is, why haven't mortgage rates responded, or why aren't mortgage rates 0.5% lower since the Fed just cut their benchmark rate by 50 basis points? And 50 basis points is the same thing as saying 0.5 point. So the simple and upfront answer really is that the two are not connected at all. It's the same reason why back in 2020, when the Fed benchmark rate was zero, mortgage rates were not zero. Right now, they were super low, 2%, 3%, depending on margins and spread and things of that nature. But yeah, the two they're not connected. Now, as to why mortgage rates have actually gone up a little bit, and it's not drastic by any means. In fact, the upward movement is incredibly nominal. But to answer that part, this is where we want to think like an investor. And what does a smart investor do when they just got a haircut on their rate of return? Okay, so give you a little bit of an example. Let's say that you have money in the money market, and you were just getting a rate of return that was just over 5%. Again, you just got a haircut on that rate of return, and now you're getting just below 5%. So smart investors are going to shift that money to someplace else. Right now, stocks, okay? And they're going to shift that money so that they continue to get that rate of return. Now, this is where that old saying that it only takes a spark to get a fire going, this is where this comes into play. Those investors, they are going to want to preserve the 10-year yield. Okay, the 2-year, the 5-year, the 10-year. They want to preserve it. So eventually, and it's probably going to be about a week, we will see these investors put money back into the treasury and bonds. Okay, and that's really what mortgage rates are tied to. They're going to start putting money back in there to preserve it, and that little spark is going to get the fire going. In that, we will begin to see interest rates really come down. Added to all that is that we also know that the Fed will continue to cut rates in November and December. Okay, where it's expected about 25 basis points for each of those meetings. And with the weakening in the labor market, these are factors that will continue to drive interest rates lower. So here's my advice. If you're in the process of a refinance and you have not locked that interest rate, I would wait about a week, just 1 week. Okay? If you're buying a house and you're not closing for the next week, then float. Okay? Rates are going to get better. In the best kind of generic way of saying this is that investors are kind of digesting the information. They're moving money around. They want to keep making more money, okay? But they're going to want to also preserve the 10-year, and this is normal. This happens just about every time. So again, give it 1 more week, and we will see these rates get much better. If you have any questions, feel free to reach out. Take care.